Welcome to Access a Trader, the #1 community for high-level traders to learn valuable trends and strategies, connect with other top traders, and become consistently profitable. Click the link in the description of this video to receive a special offer on our revolutionary PS60 training, access to our daily chat room filled with experienced traders, and so much more. Space is limited, so make sure you don't miss out. We look forward to seeing you in the room.
Hey guys, good evening everybody. Welcome to another edition of the AccessATrader.com weekend wrap-up show. Hope everybody is doing okay. Usually I get these weekend videos done like probably either Saturday morning or Sunday morning. We just had the most insane 24 hours of soccer tournaments, basketball tournaments, taekwondo tournaments, and literally I'm getting home right now at 6 o'clock. Knock this out. So hopefully you guys had an awesome weekend. Let's get into it. Crazy trading week. Again, when we talk about collection of data, and if all you guys who are joining us for the weekly video from StockTwits or Facebook or Twitter, obviously from our friends from YouTube, you constantly hear me use the terminology collecting data. And a lot of people always turn around and say, well, what's this collection of data? What do you mean by collecting data? What do you exactly are referring to? And the one thing that I learned a long time ago is if it was just as simple as clicking a mouse, right? If it was just as simple as clicking a mouse, everybody would be rich. But the problem with trading, right? The problem with short-term speculation, more than obviously a long-term investment philosophy, the problem with it is there's so many moving parts, right? You have headlines, macro, micro headlines. You have specific company headlines. You have all these different areas of concentration that could really derail your trading. And the reason why I discuss collecting data, it's literally putting the piece to the puzzle. So let's kind of rewind, right? Let's kind of rewind. So if you guys remember last week, I believe it was on last week's video, we talked about the double top on the QQQs, right? I think it was last week's video because let's see here, 1, 2, 3, 4, 5 days ago, right? So it was last week's video. So if you go back to probably last week's video, unless I'm wrong, we talked about this double top, right? We talked about this double top, and when you're coming off of a double top when one of the most aggressive, rabid bull markets, a lot of new traders are not going to think anything of it, right? Their antennas are not going to go up, and they're not going to start worrying about the what if factor, right? The what if factor is kind of for the next guy. Nobody cares about that. The perma bull, right? The perma bull, the very arrogant sometimes perma bull, believes that the market will never go down again, okay? And unfortunately, a lot of new traders, they've started in a market, let's say 2-3 years ago, that has been an incredibly rabid bull run, right? So they don't believe that gravity is real, okay? The perma bear, right? The arrogant sometimes perma bear, and again, they're split up into two different parties. The perma bear always believes that the perma bull is a sucker, right? So sometimes they don't gather a lot of data because again, look what happens in the last 100 years. If you go make a chart and look at the last 100 years of anything, just literally anything, it probably looks like this. And this is only going back to 2010, but if you look at the NASDAQ 100, just in the last 9 years, it probably looks like this. If you stretch it out for 100 years, it'll continue to look like this. So there's a lot of camps out there that unfortunately, because of personal belief and personal bias, they don't accept that actually collecting data makes a lot of sense. And when we go back to as early as last week, we started collecting, right? We started collecting. And when we started seeing this week, the action of this week, and I started seeing a lot of people on social media talking about this. Well, who could have possibly predicted a 3% decline in the NASDAQ 100, a 3% decline, over a 3% decline, almost a 4% decline in the Russell? Who could have seen this coming, right? Who could have seen this coming? And again, I'm not Nostradamus. I'm not Miss Cleo. I don't have a crystal ball. I'm not talking about any of that, okay? We're talking about professional traders who've been doing this for a very, very long time. And I started saying this in the live webinar when we started seeing the unfolding of what we started collecting, the data collecting only 5 days ago. I started saying this a long time ago, but I say this in the room. I've watched Scarface, just like everybody else, 30, 40 times, right? And the one thing that I will tell you about Scarface, for those living under a rock who've never seen it, The movie ends exactly the same way. Spoiler alert, right? The movie ends exactly the same way. Tony dies, right? He gets shot in the back. He takes out 24 Colombians in the process, but he dies in the end, right? It's over. He dies in the end. Fade to black. The world is yours. He's in the fountain. He's over, right? Stock market is exactly the same thing. The market doesn't do anything creative. Okay, this is the same movie over and over again. You have to be, and when we say you, it's us, it's we. We as traders, we have to embrace that there is a potential of the what if that's going to happen. And when that potential what if actually plays out, okay, you can't be naive. You can't have those blinders on. You can't have the rose-colored glasses on and saying, well, it's not going to affect me. Okay, it's all fun and games until your account, your trading account, your investment account, whatever the case may be, it's all fun and games until you start seeing your funds really depleting at a very, very aggressive pace. And you're sitting there wondering, well, who could have possibly seen this coming? And that's exactly where we start kind of today's session. You look at the major moving averages, right? Dow Jones Industrial Average is a rock. Is a rock. Is an absolute rock. Had a little bit of a pullback, right? A little bit of a pullback. No big deal, right? Absolutely no big deal. But when you started again collecting data, looking at the at all the facts in front of you, you started seeing a really aggressive decline, right? Especially in shares of the IWM 2.5 weeks ago, right? We started closing at below the 50-day moving average and started really started getting aggressive. And for those of you who started seeing this within the last couple of weeks, and you say, so, well, something's wrong. Something's wrong. What's wrong here? Because again, you started seeing a magnificent strength, continuation strength in the Dow Jones and the industrials. You started seeing the NASDAQ a little bit heavy, still had a lot of speculation money behind it, but you started seeing a big disconnect, right? We started seeing a big disconnect. And this week was, again, the difference between being a trader, right? Being a trader that trades both sides of the market. We have no bias. Again, we collect data. Then being a person who buys stocks in a bull market. And we started seeing this very aggressively play out, right? Go back to Tuesday, right? Go back to Tuesday. Everything was fine, right? Everything was fine. And the Dow was up again, 200 points. And I kept on saying it over and over again. Well, if I can't find anything here to buy, well, how can there something be? How can you not possibly open your eyes and see something might be wrong here? There's something might be wrong here. We started seeing Amazon, right? You had 2050 price targets on Amazon, couldn't rally. Netflix had a chance to break out, couldn't rally. Apple got aggressively upgraded, had 2-day run, started coming in, couldn't rally. And then here was kind of the kicker. Okay, if you guys remember, Alibaba, right? Alibaba got upgraded right over here, right? They got upgraded on Wednesday, right? Wednesday session, they got upgraded by Goldman Sachs. And the stock closed at 160, and Goldman gave them pretty aggressive price target of $247 a share. Now, this is Goldman Sachs. Okay, this isn't some guy on Twitter. This isn't, some small boutique shop out of, Bismarck, North Dakota. This is Goldman Sachs. And again, the Dow was very strong. And the one thing that really stood out, especially with these beta names, that I knew something was going to be, I wouldn't say imminent, but something that we really had to pay attention to, was when Alibaba went red. It literally went red after this really aggressive upgrade. And this is kind of where I tweeted out kind of Wednesday, right? Kind of Wednesday. I mean, Monday was good. Tuesday was good. Wasn't that aggressive yet. Once Wednesday rolled around, right, the market started getting very aggressive. The pivot started getting really aggressive, especially to the downside. And this is where I tweeted out, this is kind of where I tweeted out. And I said, and this is coming on, this was at 3 o'clock. This is 3 o'clock on Wednesday. And I said, guys, take a step back and look at all the 60-minute charts. Netflix, NVIDIA, Amazon, and I said, and even Alibaba, who had a Goldman Sachs upgrade. I go, if you notice, they're making lower highs on the 60-minute chart. Now, at this point, I wasn't short anything. Okay, this was already 3 o'clock. You can see when the tweet went out. It went out almost towards the end of the day. And I wrote, this might not translate into today, but this is something to keep in mind for the rest of the week. Okay, and I obviously said, I'm just not short anything yet. And then we started seeing weakness in the morning, right? We started weakness in the morning, and then the market started rallying. And the one thing that I reiterated, and I retweeted it, and I go, don't get trapped. Remember the double top a few days ago? Rounding short-term tops. And guys, if you're a new trader or an aspiring new trader, again, this is where, again, we talk about collecting data. Rounding tops, and keep this in mind, folks. I don't care how long you've been trading. This is a fact. This is an opinion. When you have a rounding top, especially off of a very, very aggressive move higher, right? And we've obviously seen a very rapid move higher, since, you can make an argument, since the Trump administration, whether you were for him or against him, facts are facts, a scoreboard's a scoreboard. And the one thing that I always say, when you see strength and weakness coming off a rounding top, especially an imminent double top that you see right in front of you that gets kind of confirmed, the market's going to show you strength, it's going to show you weakness, and sometimes it's going to show you strength and weakness in the same interval, sometimes in the same candle, and sometimes in the same day. And a lot of people look at that and say, well, this market's just choppy. That's the chop factor. And the reality is it's not a chop factor. The market's screaming at you, okay? The market is screaming at you. Something is just not right. And if you really didn't look at all the signs, you really got caught. I mean, you really, really got caught. And Thursday, I mean, you guys saw what we were doing on social media on Thursday. Amazon shorts, Netflix shorts, Tesla. I mean, these things got one after another, just got destroyed. And you looked up and the NASDAQ was down 150 points. And then the next day, again, which was Friday, we had a very specific game plan coming into Friday's day. We knew that we knew the confirmation cycles. We knew if these stocks got confirmed on the previous day's price action that the NASDAQ really got hit, all these monster names really, really got hit. We knew this could have possibly been a second day of very, very aggressive selling. And if you look at what happened on Friday, that's exactly what happened. And, this is exactly what happened. And, these things were falling so aggressively. I think I literally probably missed putting into our private Twitter channel some of these other pivots. They were so aggressive, so fast. And when they were confirmed, okay, when some of these stocks were confirmed, and you can go through my Twitter account for the full week, see exactly how aggressive this week was, especially on the downside. Some of these trades, some of these confirmations, I was talking about this on Twitter. Some of these trades I had on Friday, they were going through support. Like some of these things I thought I was covering literally on support. They were going through support like these channels weren't even there. That's how aggressive it was. And if you go through, and again, these are majority of these names I put in pre-market, and then obviously as the pivots start rolling throughout the day, I obviously start putting in more and more pivots, obviously in the live webinar, but in the private Twitter account, and you can just see it one by one by one. So I tweeted this out in the morning. I go of 270, Tesla 270. If it starts building below, it can flush. And then I immediately said, there's also a sneaky pivot, right? There's also a sneaky pivot at 272. If it breaks down for aggressive traders, you can short it, and then you can add below 270. And this was one of the most aggressive candles I remember in Tesla in a very, very long time. So here was your 272, right? Here's your 272. Again, people ask me all the time, does pre-market candles matter? Absolutely, guys. Pre-market, after hours, it all matters. Every single candle, remember, is a 60-minute channel, okay? So it doesn't make a difference. The more data, right? The more data, the better. So we talked about, here's the 272, the low here, 272.26, 272.50. So I said, hey, for the aggressive traders, if it breaks 272, that's where I got short. 272, it confirms 270, right? So here's the 272, here's the 270, and just bloodbath. Absolutely bloodbath. Congratulations for you guys who call Tesla just an absolute, and again, they just kept on going one after another after another. Again, this is pre-market. This is before 9 o'clock. I go 358. Look, Netflix, 358. If it builds below, can flush. Again, look at Netflix, all right? Look at Netflix. And this, again, here is the bottom of the channel here, 358. Once the 358 got taken out, I mean, just bloodbath, just an absolute bloodbath. The first candle was down 8. Okay, first candle down 8, and then oh, by the way, when you thought it was going to bounce right off this 60-minute support, oh, by the way, it went down another 8. Just absolute bloodbath on these tech shares. And again, as you can see here, one after one after one. Nvidia 277. If it builds below, can flush. Nvidia, you can see it right here. Here was this 277. Where was it? 277. 277, right? Here was the 277, and just murdered, just absolute murdered. And this is what really, this is what really got market sentiment bleeding like literally out of their eyes. Okay, so 181, I think 181.05 was the previous day's low on the Qs, right? Previous day's low of the Qs. And I said, look, if this thing starts building, right, monster line in the sand, if this thing starts building below, can really flush, I mean, really flush the macro sentiment. And look, I've been trading for a very long time. I know a 50, 60 cent candle on the Qs are aggressive. It's like probably cashing like $3 on I would say $3 on Tesla, maybe $2 on Tesla, maybe a 50-cent candle on Qs. When I tell you, okay, here is the 60-minute. Hold on, where's the 60-minute low? Right, so here's the 60-minute low. Right, here's the 60-minute low. Here was yesterday's. Here's yesterday's high. Here's yesterday's low. Once this thing went below that level, I mean, literally, I don't know why I have data missing, but you can see it on the daily chart. It looks very weird. So you can see here, 181 was low here, 181 was low here. For some reason, I have data missing on my 60-minute chart. I'm not sure why. But you can see here, once it broke that 181, I thought it was going to get down to like 160, I'm sorry, 180, 160, let's see, 179.50 maybe, right? Maybe $1.50 within 2 days. It went down at $2.50 after that 181 breakdown. Literally went right down to the 100-day moving average. This is a $3 candle. Okay, I don't remember the last time without macro really aggressive news that we saw a $3. I kept on covering these things perfectly. I go, oh my God, dead bottom. 5 minutes later, another $1.50. It absolutely tremendous whitewash on the NASDAQ 100. And again, we had some other things here and there. Nike builds below 80, went down, I don't know, maybe 70 cents, not really a lot from there. Here's my poodle with the Yankee tickets for tomorrow. But anyway, so incredibly aggressive, right? Incredibly aggressive. And it does really prove one thing. Again, waking up in the morning, looking at the pre-market high and pre-market low list, it's Neanderthal trading. It's lazy trading. Okay, people say all the time, well, I'm going to put in the work, I'm going to study, I'm going to do this, do that. Again, I don't know exactly what everybody's putting in the work for. I don't know exactly but if you're putting in the work, looking at a stock that's up 800% pre-market, and you're looking to buy it for a dime, right? You could probably get a better value at somewhere else. Again, just my opinion. Again, I've been doing this for a very long time. So if you're a new trader, and again, I don't care if you're trading my process, your process, any other process, whatever you do, learn to collect data, guys. Again, it's just not something that we talk about lightly. It's something that every single day you really are putting the pieces of the puzzle. And that's very important because, again, I say this all the time, luck really does reside with the prepared. It really does. And especially the last 2 days have been two of the most aggressive sessions that we can remember in an incredibly long time. So what do we like going forward, man? I mean, look at what going forward. Here's where we are. So the NASDAQ 100, it put in a hammer off the 100-day moving average. Again, stocks trade, like I say, supply to demand to demand. So there was really no shock that where we stopped yesterday. So going into this week, right? I mean, look, can we get a dead cat bounce tomorrow, right? Because we had two really aggressive sessions in the NASDAQ 100. Can we get a dead cat bounce tomorrow? Yeah, probably we could. But this is the line in the sand, guys, that everybody really needs to write down. Again, set a reminder, whatever platform you're using. If we could start building, right? And again, this is a big if. Okay, this is a very big if. We don't want to put the cart in front of the horse. Again, I'm not a long bias trader. I'm not a short bias trader. I'm an opportunist. Wherever the money is, where I think gives me the best defined risk element and where I can get the biggest value, that's where I'm going to go. So, but I'm not naive. I also understand gravity is real. Okay, gravity is real, and when it strikes, it really does strike very aggressively. So, to kind of start the week, start our week off. We got to watch this level. We got to watch this level for later in the week. Especially, we got to watch out for more clues. Okay, the majority of the selling obviously happened within a 24-hour cycle, so the meat of the bone is gone. Right? I know a lot of you guys did very well with Teslas and Amazons and all that good stuff, and Netflix and the videos in between. But now we have to be a little bit more meticulous in collecting more data. We got to watch out for clues. So the first thing I'm going to be watching on Monday, right? First thing I'm going to be watching come Monday morning is, well, how do these stocks react in the spikes of the futures, right? If you believe in the generational bull market. If you believe that we will continue to rally into Thanksgiving, into the Santa Claus rally, into the January effect, into the strength into the first quarter of 2019, well, don't we have to see clues, right? Don't we have to see clues? You can't automatically assume, oh, this is a great bull market, right? This is a great bull market and blah, 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 and automatically assume we're going to rally into the end of the year. We might, maybe we might not. So our job come Monday morning is start watching. What happens if Tesla can't rally with the first surge of the futures? What happens if Amazon can't rally with the first surge of the futures? What happens if there's a dead cat bounce and they start making lower highs? How do we prepare for this next pivot? How do we prepare for this next pivot on this 178.43 in the NASDAQ 100? Again, these are all questions come Monday, right? For the first 2-3 candles, we're going to get answers for. So it's very, very easy to kind of fall prey into and kind of paint ourselves in a corner. What we need to do is obviously get clues. So let's talk about Monday's session. Again, can we see a dead cat bounce? Yeah, I think we could. I think we could see a dead cat bounce. What I did for all you guys who are on within our walls, whether in the silver program, obviously in the live webinar, on tonight's email, in case we do continue selling into the week, I put about 5 or 6 really good ideas for pretty good solid entries based on rising longer term support zones. Okay, so you're going to see Amazons and Netflix and Google and Apple and Squares and stuff like that. But for the rest of you guys, let me give you guys some ideas for tomorrow's session, see if we can get a follow through on certain names. So let's talk about it. Look at the chart on ENDP, okay? Look at the chart on ENDP. So it broke out, right? It broke out over a long channel that started on August the 8th, put in a high of roughly 1796, and then it actually held up fairly well considering the 2 days of destruction that we saw in price, especially on the composite. I think if it starts remounting this $18 level, guys, set a reminder, if this thing starts remounting this $18 level, I think you might have the next leg up, so keep an eye on that. Costco had a really aggressive move lower, right? Really, really aggressive move lower. And again, if you believe in the theory that stocks trade from supply to supply and demand to demand, again, it stopped perfectly on the rising demand. So the low of Costco is this 217.79. If you're an aggressive trader, right? If you're an aggressive trader, and again, guys, really understand, buying something red to green or shorting something green to red is not a pivot. It's just a continuation of momentum. So that's why I always say, if you're an aggressive trader, and I do this a lot of times, I will take something green to red, but I also do understand that the confirmation of a downside or upside pivot is crucial for the continuation move. But again, so that's, it's obviously all individual based. So tomorrow, keep an eye on Costco. If it gaps up tomorrow and it goes green to red, for all you guys who are aggressive traders, you might take it for the green to red move, or a confirmation below 217, 279, continuation going lower. Look at CME. CME actually looks pretty good. So it broke out, it's doing very, very well. Look at the 16-minute chart, right? Look at the 16-minute chart on CME. I haven't traded CME long enough to kind of have a lot of stock, especially it's a listed stock. I'd like to see this thing build above this 183. If it could build above this 183, you could get a moonshot to this 185 area supply. So keep an eye on that. Let's talk about Tesla. Tesla's just been just an absolute rock star trader, like really, really rock star trader for the last 2.5 years. Obviously, a lot of problems all over the place. You can see that you don't need to be a rocket scientist. You don't need to be a monster 5-star analyst to figure out where this pivot is. The low of this channel right here is on September 28th is 260.55. Yesterday's low was 260. Friday's low is 260. All this thing needs to do, if it starts really building below 260, your first move is the 245, right? You see that? I'm sorry, excuse me. Your first move is the 252, okay? Your first move is the 252, and if you want to get into longer channels, then you have a potential move going to 245. So that level here on Tesla's pretty important, right? I mean, again, you could clearly see the stock is way oversold in the last 4 days. Doesn't mean it can't go lower, but again, as we say all the time, I have no bias. We'll be looking, and this is, please get into morning strategy session tomorrow, 5 minutes after 9. We'll obviously see how the futures open up. Maybe there'll be a level for a dead cat bounce. We'll see. So for now, this 260 level is going to be very, very important. For all you guys who are trading these small cap stocks, check out this little NVAX Really not my thing, but keep an eye on this thing. The longer it sits here in this channel, right? The longer it sits here in this channel, the higher probability the move higher is going to be. Big volume. Stock trades, pretty liquid, 8, 10, 15 million shares a day. It's not like one of these low floaters. Any close above this 220 level looks good, looks absolutely good. So if this is your thing, obviously keep an eye on that as well. So guys, I want to thank everybody for all your support, for all you guys who are joining us tomorrow in the live webinar. Please get there 5 minutes after 9. We go through all the pivots, depending on the futures, both sides. We obviously put everything, all denomination of stocks in there, because I know some people like trading small caps. I know some people like trading mid caps. So I try to provide something for everybody, but my game is the beta game, and I'm pretty comfortable trading it. So guys, have an awesome week. I wish you guys the best. For all you guys who are not joining us, have an amazing trading week, and with God's help, we'll do it again next Sunday. Take care, guys. Have a great week.